Hey everyone, Brian Balon here, your local Phoenix realtor, and I've got another market update for you guys. October 2020. Boy, the market has been very, very hot, and it continues to get even hotter. And we're going to go over a lot of really good stuff here. As you're probably wondering, what's going on? Is there going to be a crash? Is the stock market going to crash? We have the elections coming up, so we're going to address all of these issues. But before that, if you haven't already, please subscribe to the channel. Your support is greatly appreciated. Plus, you'll also get notifications when I come out with new videos if you hit the notification bell as well. So we're going to get right into it. So basically, crazy market. And as I've been going through this year, I've been really seeing some interesting trends that might be advantageous for you to know, particularly with just the resale market. So right now, in terms of active listings, there's about 8,101 active listings on the market. We're down 41.1% from last year. That's huge, and a significant decrease from last year. The under contracts are up 34.1%. So instead of, we have 13,203 this year, last year we had 9,848. So huge difference in terms of under contract listings. Monthly sales were up 20.5%. And then our price per square foot is at 198.68. And then our median sales price is 327,000 versus 279.5 from last year. So why do all those numbers matter? Well, it's really our inventory is really getting choked out right now. We have very little active supply. We have an overwhelming amount of buyers that are buying up pretty much anything that's even remotely desirable in the market. And we're seeing an upward pressure in prices, but the increase is about 2% per month is what we're seeing. So this year we could actually even see a 20% increase in prices year over year from January to January. That's an incredible gain for real estate, considering a good year, 6%, in normal years. I mean, it's been a frenzy. So in the beginning of the year, we were seeing around 10,000 to 11,000 active listings. Now we're just about 8,000 active listings. Remember, a balanced market in our greater Phoenix area's real estate market is about 50,000 listings. The reason why that is that why we're so low on listings is just because we have really high demand. Under contracts, like I said before, are up 34.1%. In many places, there's more homes being sold or being put under contract than are actually being put on the market. So there's just too many buyers for the amount of inventory available. And we are just another staple to the amount of activity that's going on. We're up 20.5% in homes sold this year, year over year. So it speaks to just how many home buyers are just taking advantage of the available homes for sale and entering the market. Our price per square foot being at $198.68 is really, it's pretty much at record highs right now. So, we're nearing now $200 a square foot, which we have never seen in the history of Phoenix real estate. So in terms of the average across the board, which is just really incredible. And median sales price, median sales price right now is 327,000. We're up 17% from just last year, year over year. And basically, 2 years ago, that number was 250. So you can just have an idea right there, almost $80,000 gain for the median sales price in Maricopa County. Frenzied market for sure. So what are some of the reasons why we're experiencing this? Well, one, population continues to grow in the Phoenix area. So we have people moving from all over to come to Phoenix still, comparatively to other coastal cities and some certain states, namely, New York. This isn't a coastal state, but Illinois, Washington, Oregon, you have California, right? So some of these states, they have a massive exodus of people coming into Phoenix, and they're buying up homes with significant down payments, sometimes cash, or even buying second homes. So that the population is the number one reason why real estate appreciates and why it will continue to appreciate in the future, is if we continue to have a strong demand for housing. So in that case, because we're one of the fastest, if not the fastest growing cities in the United States, that's why we're seeing the results we are in terms of housing demand and the low inventory. It's one of the main reasons. Another one is that interest rates remain low. You're seeing them in the twos, which is also record. Even in 2008, they were breaching the tips of the twos, the high twos. Now, some FHA loans are getting as low as 2.25 from what I've seen. That's not a quote of a specific loan rate, but it just gives you an idea of just how low you can obtain financing right now. So those are also record numbers to get as low as those kinds of interest rates. Homeowners. So another reason why homes are not replenishing, the active supply is not replenishing, is because they're not selling. Homeowners are holding onto their homes. They're refinancing or remodeling. So lenders and title companies are actually overwhelmed by the just sheer volume surge of refinances. And actually what I've heard is a lot of lenders have shifted to focus on refinances and sort of left purchases as a sort of a secondary. They're still trying to work them, not completely neglecting them, but so many people are refinancing that it's turning the shift towards refinances. And then people who are remodeling, contractors, are also overwhelmed with a combination of new home builds plus remodeling. So sometimes work is out 6 weeks, 8 weeks. Some build times now, new home builders, are around 6 to 9 months, 10 months, unless there's delays. Sometimes there have been delays due to COVID. This year I've seen that. It's supposed to close on a new construction home for a client in 9 months, turned out being almost a year. But that was extenuating. It was during the basically the peak of COVID and the uncertainty of it in March, April, May, where the client was supposed to close in June, and a lot of the issues surrounding the delay, COVID and the delays actually affected their close date. So what happens to the lenders? So contractors are potentially seeing delays and they're being pushed back. Also, contractors are having issues with the cost of materials. So lumber is increasing in price, as well as other materials, and then labor as well. One of the reasons why lumber is increased in price is just because of the fires in California and Oregon and those surrounding areas. But also demand. There's a lot of demand right now for new build homes. So, combination of that, we've seen almost double the price in lumber, and it continues to go up. So lenders, and going back to that piece, lenders are seeing a 45-day close instead of 30 days. 30 days was typically standard. You could expect to close in 30 days. Just got a home under contract. The lender says we can't do less than 45. So you're seeing another extra 15 days of processing and turnaround time on the loans. And we're seeing upward pressure on prices. So to speak a little bit to like the actual activity of the market. So one, we're seeing multiple offers on homes still. And so recent listing, I have had 5 offers in 3 days. And we're continuing to get offers as it already went under contract, and multiple showings. Which are, for one, good sign if you're selling a home, but if you're a buyer, it's very tough, right? So it's going to take a couple times for you to submit offers before you can get something approved and get under contract on a home. Also, some buyers that have a larger down payment, some are putting 20%, which it's more significant than a 5%, which you can do right now with a conventional even. But 20%, 50%, or $100,000 down on a $300,000 home. Those kind of buyers are waiving appraisal contingencies. So basically, if it doesn't appraise, they're going to buy it anyway, and they're going to put the cash for the difference that the bank is not willing to lend because the house didn't appraise. And as a result of that, we're seeing basically home prices going up $5,000, $10,000, $15,000. If a home hasn't been on the market in a neighborhood for 3 months, and then somebody puts their home on the market, and then they list it very aggressively because they know where the market's at, and then someone comes in with 10, 15,000 over, which is totally within realm and actually normal in this market, and they waive the appraisal contingency, the house is going to sell for that price, and then that becomes a comp. So that's why you're seeing these large jumps in 2%, 3%, 4% in the neighborhood because of these situations. We also have cash buyers that are coming in, large down payment people, like I mentioned. So this particular listing had the one I just recently got under contract, has just had a large down payment, and they waived the appraisal contingency. So that's sort of the situation on pricing and the story there. So 2% appreciation per month, so that's really what we're seeing. And I just add this little piece here is that we're seeing that much of an increase. And that's incredible for real estate. You consider if you can make 10% in a year, you did pretty good in the stock market. But to make 20% in a year in real estate is just phenomenal. So, that's sort of what we're seeing, at least in the past year over year, or potentially what we could see by the end of the end of the year this year. For new builds, if you're in the market for that, demands for these have increased. So as it became more difficult for people to purchase homes, for resale homes, they're going towards the new builds, which normally is more predictable because if the lot's available, then you can just buy the lot. But what is happening now is that builders the demand there is so crazy is that there's multiple people waiting in line for lots, and they're not releasing all the lots at one time because they're trying to, throttle their build times. If they open too many lots, they might not be able to build them in time. So they're releasing 4 to 5 at a time per month, which what I've seen when I've been helping my clients buy new build homes is that there's usually 15, 20, 25 people on a wait list. Now, it doesn't take much to get on a wait list. You just need to be pre-qualified with their preferred lender, and then you can get in line. But a lot of times, those people that are in line just get in line just so they can get an opportunity when the time comes. But they don't always execute on their right in line. So there's that wait list way of it, and usually it takes about 2 to 3 months to be in the wait list now. But if you're also, there's another option where they do a drawing. So some builders have opted to do that, where basically they have a virtual event where they'll give you the information, you meet there, and then they basically, of all the attendees, they will draw certain names up to 4 or 5 lots. And then if you're picked, then they're going to offer you a lot. So that also, depending on how they do their drawing, could mean that you could wait even longer, 1 to 3 months, or maybe even longer than that. So it's just a matter of whether you get picked or not. So, but yeah, it is a little bit. It's a process, right? It's sort of how the market is right now. I recommend continuing to go over to different new builds and just keep looking at different ones that you're interested in, and put your name in the hat on multiple places. Because it is, if right now it's as tough as it is to say, I know you, like a lot of home buyers that want to choose the home they want, but just getting your name in a lot of places right now and finding the ones that you could take, it's fine. You get okay with the location, you like the homes, pre-qualify with their preferred lender, and then get in on their wait list or the drawing. So one ode to pricing on new builds. So one of the things that makes the new builds attractive is because the pricing is sometimes a lot better than resale homes. Resale homes are appreciating like crazy. There's no multiple offers and there's no bid war on new builds. So if they're offering it at $275, that's what they're selling it for. But what they've noticed is if it takes, like, say, 9 to 10 months to build a home, and then you buy it, let's say today, 10 months from now, because of how the market's gone, the price of the homes are going up 30,000. So builders are seeing that they're leaving money on the table. So what they're doing now is they've just inflated the prices. Maybe that's not a fair word. They've increased the prices so that they can capture that 1 year appreciation. So that you're actually purchasing at what it would be worth in a year. So what I've seen with one of my clients, this is an incredible story. They bought in June, or they got under contract in June of 2020 on a spec home. So spec homes are basically homes that are in process of being built and only have about 3 or 4 months left or less, or maybe more, depending on where the process is, to complete the build time. And they bought it in June. They were supposed to close in September, and it was got under contract for $299. And then that same model with those upgrades was worth $330,000, and they were going to sell it. So unfortunately, that particular home, the buyer had to back out, but they're putting that back on the market for $30K more in only 4 months. So you're seeing these kinds of things at new builds. And another client last year got under contract for $272 in September of 2019. They closed in August of 2020. And the base price went up 30K on that one. So it is really crazy. And also, I would say this is that as strong as the market is right now, there's the anticipation is, oh, well, the market could crash. We have the elections. We have all these different COVIDs. It's affected many people. I'll speak to that here in a little bit. But I'll just tell you right now that the projections are that it's not going to be that way, because this is the market, the story of the real estate market, and even our current climate is not like 2006, 2007, 2008. The reason why we're in the situation we are in right now, and not like 2008, one, fraudulent loans aren't even being written anymore, or they're very difficult to write now because they have to go through Fannie Mae, Freddie Mac guidelines, which are now government entities. So it's not going to crash because all these loans are subprime. It's going to be from some other reason. And actually, this time, real estate could actually be the reason why the market recovers. So a couple things to think about. So what are some news items? What are some things that could affect real estate now in the short term and midterm? So yes, COVID has happened. It's still here, right? It's still an issue. And the economy has severely damaged the finances of a large number of people. However, most of the people that were affected were most likely not in a position to purchase a home anyway. So those that are in a position to buy a home have had their determination increased dramatically by the pandemic. And so it's very interesting how, if you were on the fence, let's say before this year started and you were just waiting for 2020 to be the turn, and it wasn't, it actually went up, like 15% since the beginning of the year. Now you're feeling like you're missing out, like you don't want to miss out on the tide of appreciation. So people are entering the market, coupled with the interest rates, coupled with, my friends are buying houses, a lot of first-time home buyers that are entering the market. So it's, definitely a very interesting situation, but definitely it has damaged people, and it's, that's not something to be taken lightly for sure in terms of their financial situation. But many who were on the fence are now entering the market. So another thing to consider is that, so in Arizona, our governor had issued a moratorium on rental evictions. But that's an executive order that was signed, I think around mid-June, when it was going to expire the first time. Now it's set to expire on October 31st. Now, what the governor has done in the past is before it expires, he will typically renew it till the end of the year, et cetera. In this case, we haven't heard anything yet. I haven't seen any articles or anything like that. Admittedly, I haven't kept too much track, but I do know that it expires on October 31st. So we'll need to see what happens, because if they let it expire, then you're looking at thousands and thousands of Arizonans and people who live in Maricopa County to be evicted within 30 to 90 days. Now you have a potentially larger issue with having people not having a place to live and being displaced. Plus, even currently, landlords are sort of hurting right now because they're not able to pay their rent through their traditional rental income. So Arizona has offered some options for landlords to get rental assistance in that way, to pay their mortgages or even possible deferment. But how long can that last, right? So something to watch out for. And also the potential stimulus package that has halted, but they're trying to restart the talks. But those can also renew unemployment benefits, right? The $600 per week. The PPP funds could actually be replenished, or they could, restart another PPP, a second round program, $1,200 checks. One thing about the PPP for the first round, if you got one, is that they are actually making it easier to be forgiven. So there's some new news about that, but not fully developed and matured, so it needs to be watched. Another thing that was actually really of a concern, especially in March, April, May, was the spike in national foreclosure rates. But here's the thing. So that was one idea that many have. They speculate, well, foreclosures are on the rise because people aren't paying their mortgages because they lost their jobs. But in this case, our foreclosure notices in Maricopa County in September numbered only 99. So there's only 99 basically notice of foreclosures in all of Maricopa County in September. And that's down 76% from September 2019. So we're at record lows for foreclosure notices in Maricopa County. So the feeling is, well, we're on our way to, a massive foreclosure surge, but we're already almost 7 months into the pandemic, and we have 99 basically cases of foreclosures. So, in the near future, it doesn't look like it'll turn. I will agree and say that it won't be like that forever, because some of this has to play out with the economy and things like that in terms of unemployment to lost jobs and all that kind of stuff. But right now we're looking at a very minuscule number for foreclosures. But that's something to watch, right? If that increases, we could see that surge of foreclosures. The question is, will it be enough to offset the issue of supply in Maricopa County? We don't know. We don't know how bad it will be. But what we see fundamentally, if we look at the numbers, that this market in Maricopa County is so strong, and it continues to look strong, that it'll carry through 2021. So if you are a seller, you are in a very good position. You have a lot of equity in your home if you bought within 2 years or previous, and you can continue to ride the wave. And it's also a good time to sell a home because there are many buyers out there who will take your home if it's at least somewhat desirable. If you are a buyer, don't be discouraged. It is also a good time to get into a home and ride the wave, because as this can take us into 2021 and beyond. Now, will the market turn? It has to eventually, right? It's just markets are cyclical. But just keep in mind that interest rates are still at record lows. Prices are going up, but people who bought, like I mentioned in my story, who bought 4 months ago have seen incredible equity. So up to you. And if you need any help with that, if you're also investing, it's another great time and opportunity to do that. If you're buying, selling, investing, love to help you out with that. Thank you guys for joining. Again, if you haven't already, please subscribe to the channel. I will want to get more consistent on these videos, so keep an eye out for more, and we will catch you all later. Thanks for joining.